In this video, we're going to talk about price action rules and how to understand price action in general. Now, the structure that I'm looking at is a trend range structure. And as a price action trader, my goal is to always identify important key levels because every single trend range is contained within these two key levels. And there's a high chance that I may end up working with these key levels throughout the rest of the day. So I'm going to select the low of the day important key level. Just going to copy it, put it at the top. And at the same time, while I'm identifying my key levels, I'm going to draw the channels on the chart because on every single chart, there are channels working within, and these channels are always working in some form of a pattern. They're never alone in the chart, and they are going to help me to stay on the right side of the market. All right, so the market opened, and this is the structure that I have in front of me. And right now, I have a little bit of a dilemma. Because according to trend range rules, most breakouts of trend ranges will fail, and we are in a trend range. But at the same time, I cannot ignore how strong this bearish momentum was to start the day with. So when I'm watching this, at this point on this is starting to look quite strong bearish. So when I was watching this live, I was quite leaning more towards expecting continuation of the bearish momentum. But if you're not sure what to do in this situation, remember, most breakouts will fail at least temporarily. So there's a high chance that the prices will pull back, test this important breakout area, and if the key level holds, the bearish momentum will going to resume, or the bearish momentum will not resume and the prices will pierce through. So this is how you're going to approach this market. You're going to observe how prices are reacting to this important key level. Okay, and we can see that the prices are completely ignoring this main key level and they are reversing strongly to the upside. So this was the clue from the market that I need to respect the overall trend range, which was the main pattern, and the shortened pattern right now, the shortened bias, is this uptrend. So I'm going to redraw a channel because I always want to stay on the right side of the market. And right now we have a bullish uptrend working higher. We're back inside this trend range. So the only thing that I'm focusing on is this little bullish structure right here. I'm sticking to the shortened channels. So right here, we have a break of this shortened uptrend. This means that I expect, according to trendline rule, I'm now using a trendline rule, for prices to create new high. Because after break of a channel, the chances are slim that the market is going to reverse quickly without even testing for prices to create new high. So what do I expect? I create new high. I expect for market to create new high, but I want to buy a high probability setup, and it will be a two-legged pullback. A two-legged pullback would look something like this at the EMA at the key entry point. That will be my chance to buy a market as a high probability setup, and prices are pulling back, going to EMA, and notice the two-legged pullback form. This was the highest high of this entire uptrend. This is where I start counting my entries, my pullback. First attempt to go long, pullback, second entry long. Now question is, can I go long here? I cannot, because notice the signal bar, doji signal bar, which is indicating indecision. This is very neutral, no signs of bullish pressure at all. And not only that, it is inside bar of this bearish bar. So if I'm taking inside bar and it is a doji, that's a big no-no. So I cannot go long at this point on, even if it's at the key entry point EMA. I'm going to redraw shortened channel. If I draw the channel tightly, which is how I'm supposed to draw it, I see that these candles are fitting nicely inside this channel. I have overshoot, which can lead to break of a channel or possible reversal. And I'm combining the overshoot with the main pattern. So I'm really betting on this overshoot working to the upside and creating a new high. And lo and behold, strong push above EMA, 4 consecutive bullish bars confirming the bullish momentum. Price is pulling back strongly and we have high low. So this right here is strong push above EMA, high low, nice bullish bar. And this is a high probability setup. High-low confirmation setup. You may be thinking, is it okay to go long into these highs? Yes, because we expect new high, and you have to think about this. A lot of sellers probably sold triple top against the main trend. You're not thinking about selling. This uptrend needs to get new high, and since you have such a nice bullish bar of the EMA, this one is worth taking a chance on. And notice prices did create new extremes. So from price action perspective, we have first leg up, pullback, second leg up. The legs are not measured. That's not a problem. Sometimes the legs are going to be measured like this, larger two-legged pullback down. Notice perfect measured move. And sometimes the legs are going to be a little bit longer or shorter. That's not that big of a deal. Your goal is just to have an idea where the market is going. And just because you overshot a little bit, that doesn't matter. You still expect for this uptrend to be over. And we have a strong push below EMA, which is indicating trend shift. And right now, the new trend may start bearish. So as I'm predicting a brand new trend to start, I basically predict reversal of a trend. The safe way for me to take this setup is going to be a failed second entry long. So I'm going to redraw a channel and notice what we have. Another highest high, but I reset the count. First entry long, pull back. Second attempt to go long right into EMA. So we're below EMA. This is nice bearish bar. A failed second entry long below EMA. Uptrend played out. This is a reversal pattern. And this one is a good high probability setup to take. So this is following price action rules. I took this trade myself and notice prices stopped this failed second entry long just by one single tick. You could have done in this situation, and I sometimes mention it, once you see these swings so close to each other, you can put it one tick above the lower high because it is really just one tick difference. So you can put it above the entire swing. I didn't do it. I just kept it at initial signal bar right like this. The setup got stopped out by one tick, but here, once I sold this bar right here, is my analysis changing? My analysis still remains the same. Buyers have no point of going long because uptrend played out. I expect for downtrend to continue, so my analysis remained the same. I actually re-entered right here, even though it is more advanced and aggressive. The beginner trader should probably not add here because you just have to take the losing trade. It happens. You just get stopped out by one tick. But we've talked about these fake outs lately a little bit. It is not that uncommon. Lately we got, I think 2 fake outs like this. So you already can bet that once you get stopped out by one tick and you see confirmation, you're going to expect the resumption. You can see this is where the new low was formed. It was a little bit unfortunate to get stopped out by one tick, but pretty much nothing you can do. It's just part of trading, and you can re-enter here if you're reading the context correctly and you're confident in your analysis. If you're still second guessing yourself, you definitely don't want to enter. We also have new low, first entry short, second entry short, which was very tempting because when I redraw my resistance, I can see this coming into play again, and we have 2 legs up. But we've been going sideways for quite a long time, that by this time you get a second entry short, you're quite in a consolidating area. It worked anyway. Decent setup, but it's a little bit too aggressive. And also notice, first leg down, pull back, second leg down. Indication that the downtrend played out, and only now buyers can start buying. Okay, notice we are in over trend range, but if I'm going to focus on this most recent structure, we are kind of working in the middle of no man's land. We're not near the main overnight low, and we are very far away from the overnight high. And generally prices are just not hanging in the middle of no man's land like this. And this leads me to believe, when I was watching this live, we may have a smaller trend range on our hands. So what I did, we drew this trend range. It's easy to identify the lows because you have nice double bottom showing you where the lows are. So you're just reading the price action and trying to predict the pattern. This is what you do as a price action trader. With more experience, you can gain a feeling for this, how to predict the possible levels. What I did, I first selected this place to put my resistance. I didn't want to put it at the top because this feels too far-fetched. Generally, when you select the highest swing, it may be too far. You will always tweak it as the price action keeps developing. There is nothing wrong with it. But since I have no more confirmation and I'm just basically, eyeballing in where it may be, I'm just going to select a reasonable place. I'm going to see what the market will do. Notice, push above EMA. Okay, so this is confirming the trend range structure. And when I'm seeing this and I see rejection, this is where I'm going to redraw it a little bit tighter like this, because we have a break new high and we have new high, first entry long, second entry long. We have another push up. So even if I'm going to redraw via the channel like this, it now has another break, another new extreme. And notice a big bearish bar, rejection after new high was formed. So I'm combining the trend line rule, which says uptrend played out. Now we have a second entry long here. You kind of feel it is going to push higher. This is one of those setups where you feel it's going to push higher. But since you're going long into these highs of a small trend range, not really the safest option. You know, it's not a bad setup, but I would prefer focusing on shorts because the structure is telling you that you are in the trend range. Buy, move down, move up, move down, move up, flat EMA, you're going sideways, and you can see that this is clearly a trend range. So this right here is new low, first entry short, second entry short. So this is a second entry short. Not only that, failed breakout, and most breakouts of trend ranges will fail. Notice this breakout failed, pull back into trend range, and this breakout is most likely going to fail. I took this trade myself, and market continue pushing lower. So what that means, I'm going to redraw another channel. We have overshoot. Are we looking to go long here? Because one trader asked me if it's okay to go long because he took a higher low here. Going long here is not good for two reasons. Number one, analyze the trend range. Notice how each move is strong. Every single move in this trend range, up or down, is much slower, has pullbacks within it, it's just crawling lower and crawling higher. This one is a little bit different. From the very highs all the way down here, notice how strong this move was, completely different from all of these pushes in this trend range. So this is indicating strong bearish momentum. And the second clue is, which is a little bit more advanced, but I'm going to mention it. Once you see this small little support so close to the main support here, overnight low, a lot of times, and same goes for trend range, from the highs, from the resistance to the main resistance. Once you see the smaller one, the temporary one, close to the main one, prices will generally reach the main one. So you strongly push down, you're close to this support, so you expect to push down. So this is not a good place to go long. And you can see market continue pushing lower. Okay, so the main support is reacting. Oops. A little bit unclear area. Yeah, we are at the support, but I don't want to buy just yet because we're still below EMA. You can have additional push down. Okay, and prices are pushing lower. Can we get bearish momentum? And no, prices are strongly pushing higher. So this feels very similar to this. So at this point on, okay, trend range is confirmed. I am back above the main kill. And notice, this is why it's so important to identify these kills. And notice, you know, pure price action. You don't need anything else. Just if you understand the language of price action and you learn how to navigate it, you can get the feel where the prices are going and you can capitalize on the high probability setup. So what is the high probability setup now since the market is going higher? Well, the high probability setup is going to be the two-legged pullback at the EMA. New high, first entry long because we expect new high. But the second entry long form really far away from exponential moving average. I can't take it, even though it worked, doesn't really matter. So many times prices will stop you out because it is so far from the EMA. So I'm just going to sit on my hands, not do anything. Uptrend created new extreme, indicating bullish momentum played out. Let's see what is happening. Okay, we're pushing stronger to the downside. Can we get a failed second entry long? We can't get even a failed second entry long. So never mind, I'm going to redraw the downtrend. When I was watching this, I had my spike in a channel because I was really expecting for prices to go and test this bottom. Why? Because if you zoom out, you can see quite a bearish imbalance. The upper portion of a trend range is completely empty. And this move down was quite strong, but I was proven wrong because you can see market instantly reverse back into support, basically confirming a trend range. And right now we are in a smaller trend range at the bottom half of the main one. So we're just sticking to the trend range rules. Just going to redraw the channel. I don't see any good setup. Uptrend played out. Another push higher. Okay, you're pushing higher. Okay, you're pushing higher. So we have EMA rejection. So many new highs, which is indication to me that we have a larger channel in play. Once you see break, new high, new high, new high, new high, you have to adapt and there's possibly a larger pattern. Notice you have a break new high, instant reversal, and clear break new high. But here you have consistent swings in this channel. So this is indicating that this channel is flat. This channel is wide. This channel is not wide. So we are pushing higher, we have a break, new high, and another push to a new extreme. So you can see I'm just going to still work with these key levels because this is a place where the prices may turn. I have first leg up, pull back, second leg up. I have strong reversal down, and here we have new low, first entry short. I was anticipating to get a second entry short and a failed second entry long, but there was no tick higher above this bullish bar. So this is just a continuation of the first entry short, which is unfortunate. We're in a great short because uptrend played out, strong push below EMA, and here it looks like we may get a failed second entry long. Can we get it? No, there is no trigger below this bearish bar. And even if there was a trigger, by the time it's too big, stim at the bottom, probably would not have been great entry even if there was a trigger. Market continue pushing lower, and notice first leg down, pull back, second leg down. So you can see very common and very reliable in trading ranges for prices to pivot after the two-legged pullback. So I'm watching this, I'm basically in the middle of trading range, which I'm not interested in taking a setup in the middle of trading range. I'm just being patient. Notice market keeps working. Okay, we have a break new high, so I can start anticipating short setups. No failed second entry long. Can I sell here? I don't really want to sell just yet because EMA keeps rejecting. This is not really a failed breakout just yet. The trading range is a little bit larger, so I cannot just sell the top like this. I want to see push below EMA in reversal pattern. Not interested selling into EMA. EMA keeps rejecting. I'm not really thinking about going long. This is what retail traders would do, betting on the breakout. And notice, retail traders are watching this thinking, okay, we may finally reverse here. It's time to buy the market. Everybody's teaching me on the internet the breakout strategies. You want to pile in here, but you can see instantly everybody got stopped out and all their stops are being taken out because all the smart traders, the institutions, they're selling at the top because most breakouts according to trading range rules will fail. So you want to do the opposite what the most traders are doing. You want to take advantage of these stops, but this was gigantic failed breakout, so you can't even enter anyway. The safer way would be to take a failed second entry long, but by the time you're all the way down here, you're thinking you may not even most likely get a failed second entry long. So prices are correcting. Okay, notice the structure here. This is right now the most recent spike down. So once I'm watching this, I'm combining the trading range rule. So I expect for failed breakout to reach this support. Downtrend needs to get new extreme. And right here, we have a pullback to EMA. We have a first entry short. Okay, I cannot sell just first entry short. That's not a high probability setup just yet. But I have a break new high indicating, okay, now it is safe for me to sell. You're at the key entry point, okay. Second entry short. I was ready to take a second entry short here, but the signal bar deterred me from taking this setup because the signal bar has bullish body. So nothing I can do. If you enter this, you know, not a bad setup. But notice what we have, a lower high, confirmation of the second entry short. If the second entry short has a bad signal bar or you're unsure or the trend line is in play, the lower high is going to be a confirmation. And since I was already expecting to take this second entry short, once the lower high forms, it's pretty much just a confirmation of the second entry short. And the signal bar is much nicer, indicating good momentum. EMA kept holding. I still expect all the other rules in price action to being followed. Great high probability setup. I'm not interested in selling at these lows because downtrend played out. Even though it pushed lower, not really a high probability setup. I cannot buy blindly just yet, even though it worked. You know, it is too risky. You never know. Notice, once again, by the way, first leg down, second leg down. You never know if you're going to make the additional push down. And by the way, this is before the news FOMC, so you don't want to be trading hour before the, excuse me, like 30 minutes hour before the news because it's really slow, low volume, and you can see the news came out. So I'm going to fast forward this because you're not really supposed to be trading this anyway. I'm going to redraw the uptrend, still going to redraw the resistance, and notice once again how reliable the bottom of this trading range is. You can identify it very early and still coming into play. So uptrend is in play. According to rules, I expect new high. I have a second entry long, but I have congestion. 1, 2, 3, 4, 5, 6, 7 bars stacked. This downtrend can get new extreme. Not interested in taking congestion setup. And notice we have first leg down, pullback, second leg down. Very common. So after you see two-legged correction played out, and it is a correction because the trend is up. We're coming from the failed breakout, so you expect for prices to go here. You had a high-low confirmation of visual two-legged pullback, but this high-low never really truly managed to form above EMA. It formed below. So had this close above EMA, this would have been a really tempting setup. But like this, you may get a little, you know, choppy mess here, but not a bad setup if you close above EMA 100%. New high reached. So what you expect? Failed second entry long. You're following the trading range rule. Nothing much to overcomplicate. And notice you have a new high, first entry long, second entry long, failure. But I don't like going short here just yet because sometimes once you have the second entry long failure after visual two-legged pullback separate like this, you can get a little fake out. And especially since you touch the resistance here again, this is allowing you to reset the count. So I like resetting the count here because you touched the key level and treating this as a first entry long pullback. Notice felt second entry long after count reset. So this is much better setup. You've proven you've pushed below EMA. Great signal bar, high probability setup, felt second entry long, and market continue pushing lower. So I'm just going to quickly make it a little bit tighter. Just gonna play around with this because price action is giving me more information. Okay, prices are pushing lower, break, new low, and another new low. Okay, we have a break 2 legs down again. You would be expecting prices pushing above. Can you take reversal pattern here? Notice new low, first entry short, second entry short. I cannot really go short just yet. Why? Because from the very top all the way down to the bottom, you never managed to close above EMA, not once. So that means that the downtrend may be a little bit stronger, and taking an early reversal is not a great idea. And this is not even a reversal pattern because it formed below EMA, not above. So you have new low, first entry short, second entry short failure, which you can't really take long below EMA, but notice what happened. Take it higher. All the early longs are trapped in a big bearish bar, a lower high confirmation setup of the second entry short. Quick momentum trap. Key entry points are holding, you want to take it, work for a scalp, and finally market reverse higher, and this is where the market closed. I hope you find the video helpful, educational, and I'm going to catch you guys in the next one. Take care, everybody.